Hello, everyone. Welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options Doug chat channel. That's a great place to post questions, comments, and content related to the topics to my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X. My name there is at Doug Pless. Just want to let everyone know that Bookmap is encouraging everyone to join Discord. You will need a Bookmap subscription. If you have not already subscribed to Bookmap, there is a free subscription available. Once you subscribe, you will need to verify your account. Then you can fully participate in the Bookmap Discord chat uh, by posting as well as watching the live streams in Bookmap Discord. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, certainly the large cap tech stocks like the Magnificent Seven stocks that I trade and follow, as well as the equity index futures like the S&P 500 and the Nasdaq 100. And for the S&P 500, SPX is the underlying index. SPY is the much more liquid ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index. QQQ is actually the much more liquid ETF version of that index. And the NQ futures contract is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process of trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as their directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset. Setups in that asset can be taken with future contracts, shares of stock, or options, depending on the asset, as well as the way you like to trade. Give me just a moment here. Just checking the chat and YouTube. Questions and comments are welcome, and I will be watching both the Options Doug chat channel in YouTube, as well as in Discord, Bookmap Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And just please be aware, for those of you who are on YouTube, I am focusing most of my time on the Discord chat. I'm kind of limited. I'm still a refugee from Helene, working on limited screens here. All right, here's my agenda for today, Friday, October 11th. First of all, I want to go over news items, economic data, and events for today. As Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with news items, economic data, and events. There were a couple of data releases this morning. First of all, PPI data came out at 8:30 a.m. Eastern Time, and it looks like the year-over-year data came in a little bit hotter than expected. That's the year-over-year data. It looks like the monthly data in line. And then at 10 a.m., Michigan consumer sentiment came out. That was lower than expected, lower than the previous number, and there was a pretty sharp reaction to the market from that data, apparently. So let's take a look at that now. So I'm going to go to the S&P 500 futures. This is Bookmap, S&P 500 futures. And this is the reaction to the PPI data, pretty muted. And this is the reaction to the Michigan consumer sentiment that came out at 10 a.m. Very bullish reaction and a move higher from the SPY 576 level all the way up to the SPY 580 call wall. And that's also the upper daily expected move for ES. So more about that later. So that's a reaction to the data. Again, PPI data a little bit hotter or in line with expectations. And Michigan consumer sentiment a little bit lower than expected, and a very bullish reaction to that data. All right, that wraps up the data for this week. Now let's move on to positional analysis. And I'm going to start with the S&P 500. This is the SPX, the underlying index, one-day chart for 1 year worth of data. Let me point out a couple of key turning points. First of all, this is the August 5th low, 51.19. Big rally after that. Pull back to the 5,400 put wall. Another rally. And here's a smaller pullback. So one thing to note is these pullbacks are getting smaller and smaller. Kind of interesting. All right, let's move on now and take a look at take a look at a 30-day 1-hour chart. There's that pullback to 5,400, just above that. That was also the SPY 540 put wall. Now, SPX has broken out of this range somewhere between 5680 and 5765. And SPX broke out of that range on Wednesday, opened up, and now is trading above the call wall. So breakout above the range and a pretty nice rally this week. All right, let's take a look at the levels on this chart. Squeeze down. All right, let's take a look at levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market, based on the closing price for SPX from Friday, last Friday. SPX trading within that range for this week. The dashed blue lines are showing the lower and upper daily expected move. SPX has traded up and slightly above that level today, the upper daily expected move. So we'll take a closer look at that in just a moment. So there's the expected moves, the daily expected moves based on the closing price for SPX from yesterday. Note I do post those levels in Discord every day the evening before. All right, the dark red lines on this chart are showing spot gamma levels. These are based on gamma weighted open interest. They're provided to Spotgamma subscribers on a variety of trading platforms. I'm going to point out the key daily levels. First of all, the put wall has moved down now to 5,500. That's a strike with large negative gamma that can be expected to act as support. And again, that level did move down from yesterday. Next level is the volatility trigger at 57.45. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge to the delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge to the delta exposure. That tends to subdue or decrease volatility. And then finally, the call wall at 5,800. That's a strike with a large net positive gamma, and that can normally be expected to act as resistance. That's also the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. And note the call wall did also move down from yesterday. Just a slight move down from 58.25, kind of an odd level for the call wall, down to the big round number at 5,800. All right, so for today, for the S&P 500, both the put wall and call wall shifted lower. And for SPY, the absolute gamma strike shifted lower. And that is after 2 days of bullish hat tricks for SPX. On Wednesday and Thursday, again, bullish hat tricks. And now a couple of levels shifting down for the SPX. All right, let's wrap up our view of SPX with a 1-minute chart so we can get a closer look at the levels for today. Here's the upper daily expected move. Oops. SPX did trade above that level earlier today, then found resistance at that level, but still remains above the 5,800 call wall. All right, let's go take a look at Bookmap now. So in Bookmap, I have my own cloud notes. Oops. So I can show SPY levels. There's the SPY 580 call wall that acted as resistance. And that's also just below the ES upper daily expected move. That level acted as resistance. And right at the open, the SPY 576 level acted as support. that was actually, yeah, at the open. Then after the 10 a.m. Michigan Consumer Sentiment, 577 was the launch point for that big move higher. And there, you can't see the label for it, but the SPX 5800 level is this upper line right here. And the label for this combo 4 level for SPY is blocking the label for the 5800 call wall. And note there is a difference in price between ES and SPX. Actually, this line right here, that is the call wall at 5800. So note there's a difference in price between ES and SPX. Earlier today, when I set this up, there was about a 45 to 46 point difference between ES and SPX. I believe I'm using 45 right now. So I'm showing SPX 5800 at ES 5845. And again, more about setups in just a few minutes. We'll take a look and see what options traders are doing. All right, let's take a look at Nasdaq. This is the NQ futures and Bookmap. Let's take a quick look at the underlying index charts. Start with QQQ. Four down E1 is the zero gamma level. And around that level, that acted as support at 10 a.m. Pull back to VWAP, that blue line, as well as the 491 zero gamma level, and a quick move up to the 494 level. That's not a spot gamma level, that's just a round number level that acted as resistance. And now consolidation up and down around the 493 level. Let's take a look at NDX. Let's go back to the 1 day, 1 minute. Get a little bit more perspective here. So the only level in play for NDX today is the 20,200. That's a large gamma 4 level. All right, back to Bookmap. So again, on Bookmap, I have my own cloud notes, so I can show QQQ levels. There's the 490 absolute gamma strike and the 491 zero gamma level. Great entry point for a long, and then the 494 level acting as resistance. And again, more about setups in just a moment. All right, let's wrap up our positional analysis by taking a look at gamma. And I'm going to start with gamma notional market maker's position on the camera curve at the beginning of the day. Then we'll take a look at trace and see, get a live view of gamma for right now. All right, so at the beginning of the day, market maker's position on the gamma curve is shown here. And I'm looking at the S&P 500 and the Nasdaq 100. And for SPX, gamma notional, positive, still negative for SPY, and then slightly positive to neutral for NDX and QQQ. And just a reminder, when market maker's position on the gamma curve is positive. That indicates for an index that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. And note, with the exception of SPY, those numbers did shift lower from yesterday and slightly higher or less negative for SPY today. All right, let's take a look at a live view of gamma now. This is the trace tool. This is available to Spotgamma Alpha subscribers. And this is a live view of gamma right now. This blue zone is positive gamma. And you can also see that on this is gamma exposure by strike. And you can see all the blue bars here. This indicates, again, traders are short calls, market makers are long calls. Hence the positive gamma. All right, so positive gamma environment. There is a negative gamma pocket down below, right around 57.40, 57, well, right around maybe 57.35, 57.40. If price does move down, gets to that level, it has the potential to slice through that level very quickly. So more slow moving blue SPX will be trading more slowly typically before this in this blue zone and then move more quickly in the red zones. There's also looks like a negative gamma pocket right here, right around 57.75. And you can see that right here. Gamma exposure negative, and that's at 57.75. And this negative gamma below, again, 57.35, but still solidly in positive gamma today. All right, so based on this, my thesis for the day was first of all looking for low to moderate volatility based on the positive gamma. And as always, directional bias, slightly bearish just based on the shifts lower in the levels. But then the reaction to the consumer sentiment uh, kind of put an end to that bearish thesis. All right, let's take a look at some setups now. I'm going to start with the S&P 500. And as always, I'm going to start by taking a look at what options traders are doing today. And Joe P asks, wouldn't market makers want to drive price below the call wall? Well, first of all, market makers, all they want to do is make markets. I'm talking about options market makers. All they want to do is make markets and hedge their delta exposure. And based on statistics from Spotgamma, when the S&P 500 breaches a call wall, you can't expect it to trade lower in the following days. So that's what Spotgamma statistics show for a reaction in the call wall. But again, as far as I know, all market makers want to do is make markets and hedge their delta exposure. All right, so let's again, let's take a look at what options traders have been doing today. And this will reveal how traders and market makers are reacting at this level, these levels. All right, so first of all, this is the hero signal, HIRO, hedging impact real-time options. This is available to Spotgamma subscribers. What this chart is showing is options trades and market maker hedging activity for a combined signal of S&P 500 SPX, SPY, XSP, and ES futures, all into one combined signal. This is the index signal. The white line is price for SPX, and the purple line is the hero signal. A rising purple line indicates traders are taking positive delta options position. They are buying calls and or selling puts. And a falling purple line indicates traders are taking negative delta options positions. They are buying puts and or selling calls. So this is the index signal. There's another signal that we can take a look at for the S&P 500. That is the equity signal. And what this chart is showing is options trades and market maker hedging activity. This is real time for all 500 stocks in the S&P 500 index. And again, the white line is price for SPX, and the purple line is the hero signal. All right, let's take a look. I'm looking at the total hero signal, combining puts and calls into one signal. Let's separate out puts and calls. And I'm going to go back to the index signal, go to full screen. So let's take a look at this long setup in the morning, and then the warning for the reversal. The orange line is showing calls. A rising orange line indicates traders are buying calls. When traders buy calls, market makers sell the calls. And in this case, they have to buy ES futures to hedge the delta exposure. So from the open, traders are buying calls. That's shown by the rising orange line. And around 10 a.m., they started selling puts. So that is the long setup we'll take a look at. And then just before 10:30, they started selling calls and buying puts. So in both cases, orange line and blue line moving up, that's very bullish. Then orange line and blue line moving down, that's very bearish. All right, so a long setup, also signaled to get out. Just around 10:30 as SPX, the S&P 500 reached, first of all, this is the SPX Spotgamma implied one-day move high. Notice how options traders started to take their foot off the gas as price reached that level, as well as the SPY 580 call wall. So Joe P., this is how traders were reacting at the SPY 580 call wall. And price did breach that SPX 5800 call wall. We'll see how price reacts for the rest of the day as well as early next week. So that call wall breach for SPX. All right, let's go take a look at Bookmap now. Go back to S&P 500. Zoom in to about the first 2.5 hours of trade. Remember, traders were buying calls, selling puts at the open. And the S&P 500 ES futures responded. You can see the volume dots here, green volume dots. So first of all, the volume dots of Bookmap indicate market orders, market buy minus sell. So green volume dots indicate more buyers than sellers. Magenta dots, more sellers than buyers. So you can see there were a lot of aggressive buyers on the way up. rising cumulative volume delta, that's shown by the magenta line that turns to dark blue as it turns positive. Here's the reaction to the 10 a.m. data. Pull back to SPY 577 as traders continue to buy aggressively, as well as buy calls and sell puts. You can see as price is moving up to the SPY 580 call wall, some sellers starting to come in. You can see the magenta volume dots. Cumulative volume delta starts to move lower. More aggressive sellers come in, and price moves lower. Now consolidating. So very nice move up from 9:30, pull back at 10 a.m. with the data release. Price moves higher. Aggressive buyers, as well as options traders, buying calls and selling puts in the index. Let's see what they were doing in equities. So let's take a look at the equity signal. So initially in the S&P equities, traders were selling puts. Call buyers came in a few minutes later. Price had already started to move lower as they started selling calls and buying puts. Let's go back to the index signal. This is often the case. This is my observation that I think the index signal in the morning can give a better signal, more of an early warning. And I think that's the case here. Traders started selling calls, buying puts, and then price responded a few minutes later. And again, remember around this, just after 10:30, in Bookmap, that's when the magenta dots started to appear. The aggressive sellers started to come in. Let's take a look at one other thing. Let's go back to trace. Take a look at delta pressure. This is showing buying and selling pressure. So buying support, selling pressure. Let's go back to right around 10:30. And this is the hero signal, this purple line right here. So selling pressure in red above, buying support below. So you can see the buying support as price moves up. And then SPX moved into this neutral zone. Black there, red above, blue below. No longer any buying support and not much selling pressure as well. And also the hero signal was starting to move lower. So there were a number of confirmations, first of all, for the long at the open, and then as well as the reversal at around 10:30. Options flow in both the index and equities, order flow in Bookmap, aggressive buyers at the open and again at 10 a.m., and then aggressive sellers as S&P 500 reached this final target at the upper daily expected move and the 580 call wall. Let me check for questions. All right, Joe P., you're welcome. Oh boy asks, hello, welcome, glad you're here. Would you say there's a repeating pattern around 10:30, 11:30, indicating a reversal? Lastly, from bullish to bearish, indicated by hero. I don't know if it was a repeating pattern, but certainly very clear. Again, let's quickly talk about what would indicate the end of this move higher. First of all, looking at Bookmap, price approaching a level that you expected to act as resistance. And price had already sliced through the 5,800 call wall, so kind of living on borrowed time. So levels, aggressive sellers starting to come in, cumulative volume delta starting to shift lower. All right, so those are the clues in Bookmap. The levels, as well as cumulative volume delta and aggressive sellers coming in. Good indication that quick move higher was running out of steam. Let's go back to Hero. Again, SPX moving up into this neutral zone. Take a look at Hero and the early warning in the index signal. Traders are starting to sell calls. This is a call peak pattern, can often indicate a high for the day, or certainly a local high point. So traders stopped buying calls, started selling calls, started buying puts. So putting all those clues together, that was a signal to either take a short or get out of your long position. Oh boy, that's what I'm looking at. I'm putting all that information together to develop a thesis that my long position I need to exit or take a short position. Or, if you're looking for a short, multiple ways to trade that. You could, uh, looks like in a positive gamma environment, I tend to trade more spreads than single options. I would look at selling a call spread or buying a put spread, and all you're saying is price has to remain below this, let's say this 58.20 level. Angel P asked, how would a footprint chart be interpreted or incorporated with Bookmap? Let's go back to Bookmap. All right, so first of all, Bookmap does have a footprint add-on. It's not something I use, but if that's what you like, if you're used to looking at a footprint chart, that is available in Bookmap. It's an add-on in Bookmap, so it is available. Again, not something I use, but if you like footprint, it's available. All right, let's move on. Let's take a look at Nasdaq. And Nasdaq, let's zoom in. Again, about the same time frame we were looking at for SPX, and I have highlighted a couple of reversal points. So first of all, let's look at order flow in Bookmap. Bump up the volume dots just a little bit. So I think today the shift in order flow is very clear in Bookmap here. 10 o'clock, you can see the sellers are exhausted, move down just at 10 a.m. Aggressive buyers start to come in, shift from magenta volume dots, again, that very small dot. Sellers are exhausted, aggressive buyers come in. And again, the same thing, just in reverse. Buyers are exhausted, multiple tests of this 494 level, and then aggressive sellers start to come in. Price moves lower. Back down to VWAP. Looks like, again, started to make a series of higher lows, kind of at lower highs. It broke out of that range. All right, so those are the signals in Bookmap. Also, just look at cumulative volume delta. Actually starts to flatten out just before 10:30, then a slight move lower. All right, let's go to Hero, see what options traders are doing in Nasdaq. Go back to close full screen. So for Nasdaq, there are two signals that we can take a look at, just like the S&P 500. There's the index signal that's showing a combined signal of options trades and market maker hedging activity in NDX and QQQ. It's the index signal. And there's also an equity signal. In this case, this equity signal is the MAG 7. What this is showing is options trades and market maker hedging activity for all seven stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, NVIDIA, and Tesla. These stocks make a very large component of the Nasdaq 100 and the S&P 500 as well. So let's start by taking a look at the index signal. I'm going to go back to full screen. Zoom in on this just a little bit. So the rising purple line, bullish, indicates traders are taking positive delta positions. And note here the index signal gives you an early warning of a potential reversal. Index signal starts to move lower a little bit before 10:30, and then price reverses around 10 minutes later, 10, 15 minutes later, after the index signal already starts to move lower. So you have the clues in order flow in Bookmap, and then watching hedging flow in the Nasdaq signal, you can see this early warning that price has reached a high and might start to move lower. I'm going to shift to puts and calls. Oops. So you can see another call peak here. And separating out puts and calls, again, orange line is calls, blue line is puts. You can see a very early warning here in the index signal. About 10:15, traders started buying puts. So separating out puts and calls here gives you even more clarity that high had been reached. All right, let's go to the MAG 7 signal. And just like the S&P 500, this is actually a little bit lagging the S&P 500 equity signal. So just before 10:45, traders started selling calls. Put line is pretty flat. So today in the index, traders are selling calls. In the equity signal, the MAG 7 signal. So net for the MAG 7 stocks, traders are selling calls today. All right, so speaking of MAG 7, let's take a look at some of the MAG 7 stocks. Let me check for questions. You're welcome, oh boy. Oh boy asks, is there a discount coupon for Hero available? I don't think so. Maybe there may be something around Black Friday, end of the year. I don't know. At one time, Spotgamma did offer a 50% discount for the first month. I don't know if they're still doing that or not. So just go to spotgamma.com and check that out. All right, let's take a look at some stocks. First stock I want to take a look at is Amazon. What this chart is showing is traders were aggressively buying calls in the morning as price moved up to the 190 call wall key gamma strike. And when price reached that level, they took the foot off the gas, started selling calls, not doing much with puts. So when in a stock, when traders buy calls, market makers sell the calls, they have to buy stock to hedge their delta exposure. And again, the call buyers took the foot off the gas right at the 190 call wall key gamma strike. The flow alert that came in just before 9:45, getting your attention, signaling significant options activity. So very nice long here in Amazon in the morning. Let's take a look at Bookmap. Go to Amazon. And here's the 190 call wall key gamma strike, the high liquidity level at that level. That's a history. That's the heat map of Bookmap showing a history of the limit orders in the order book. That's absorption at that level. Price inverse is just below that level. So those orders were never consumed and still remain in the order book. A lot of green volume dots showing aggressive buyers in Amazon up to that 190 level, rising cumulative volume delta. And now right around noon that has leveled off. So call buyers driving price up to the 190 call wall key gamma strike, take the foot off the gas. Buyers are exhausted and price consolidating right around the 189 level. All right, next stock is Google. Again, more liquidity targets above. This is very typical for a stock. These limit buy and sell orders, these are sell orders, typically come in at the cash open and remain in place until they're consumed. Consumed there. And the sellers at 164 are still waiting. Let's see what options traders are doing. Go to Google. Call buyers in Google as well as Amazon. Shown by the rising orange line. And it looks like Google started to consolidate before the call buyers were done. These vertical lines are showing large block orders, institutional orders. Large block orders buying calls. Next stock, Meta. Zoom in on this just a bit. So what this is showing is initially traders were selling puts, shown by the rising blue line. Call buyers came in just before 9:45. Didn't last long. Took the foot off the gas. Meta consolidates, starts selling calls, buying puts. Price moves lower. And it looks like the put selling in Meta has been pretty consistent today. Shown by the steadily rising blue line, and call buying and selling has been somewhat inconsistent. Looks like a sharp move higher. I don't know if there was news. Let's take a look at Bookmap. A lot of green volume dots, aggressive buyers coming back in, shown by the large green of volume dots. It looks like consuming those orders at the 590 level. Again, those orders came in at the cash open. Limit sell orders. Let's go back. Let's take a look at Hero again. Zoom in on this just a little bit. What this is showing is a lot of aggressive call buying came in just between 210 and 215. Right, next stock I want to take a look at is NVIDIA. Let me check for questions again. Go to NVIDIA. And what this chart is showing is traders were buying calls in the morning. Call peak pattern right around 1020. They start selling calls. Price moves lower. And note, traders were buying puts from the open. So initially, the call buyers were in charge up until about 1020. There was a call wall breach, 135 call wall breach. And let's see where NVIDIA is trading just right around the call wall steer. Looks like after the move up, move down, NVIDIA is consolidating right around, up and down around the 135 key gamma strike call wall. Let's go take a look at Bookmap. Go to NVIDIA. So there's the move up in the morning, the call wall breach. Now consolidating again up and down around the call wall. Post traded volume just below that's shown by the session volume profile. Looks like also the point of control is right at 135. That's that dark purple line. Flat VWAP, put a control just above at the 135 call wall key gamma strike. Right, next stock, Tesla. Sure, everyone is aware that Tesla was in the news with the robo-taxi event last night. Apparently, investors, traders were disappointed. So let's take a look at what options traders are doing. Go to Tesla. Zoom in just a bit. All right, so what this is showing is traders were selling strangles. They're selling puts and selling calls, maybe taking advantage of the higher implied volatility for the day, perhaps associated with that robo-taxi event. Let's see if I have that. This is the term structure. This is from Spotgamma. This is the implied volatility for the day. Earlier today, it was up around this shaded area showing a 10th to 90th percentile range. Earlier today, this implied volatility was up around the 75th percentile range. Now, today it has dropped. Looks like traders were taking, again, selling strangles, taking advantage of that high implied volatility. Let's take a look at one other thing. I switched on the next expiry. So this lighter blue line is showing that traders are selling puts, and those are puts that expire today. And they are selling calls, but that makes up about a third of the total calls being sold today. Orange line showing all expirations, green line showing 0 DTE. All right, traders taking advantage again of the higher implied volatility earlier today, most likely associated with the robo-taxi event. Net for the day, options trades negative for all expirations. Sorry about that. Zoom back. All right, let's go take a look at Bookmap. Actually, so in the morning, traders were taking net positive delta positions for the day. Another peak here, call peak, right around 1040. Traders started to take negative delta positions. Price now consolidating. Go back to Bookmap. There's that move higher. Looks like sellers are exhausted. Very small volume dot. Price finds support at 215. Price moves higher. Then options traders take the foot off the gas. Now price consolidating right around 220. All right, let's go back. Let's take a look at the index. Looks like the ES is back up toward the high of the day, just below the 580 call wall. Take a look at Nasdaq. Also near the high of the day, just below the 494 level. See what options traders are doing. Go back to the index. The hero signal for the index is making a series of higher lows. Take the equity signal. Now that's starting to turn up as well. All right, any questions? Joe P asked, if market makers are selling calls, wouldn't they have to de-risk by offloading the derivative to achieve delta neutrality? Well, if they're selling calls, so traders buy calls, market makers sell the calls, and in the case of a stock, they have to buy stock to hedge the delta exposure. So when they're selling calls, that's negative delta. They need to take something positive delta to maintain delta neutrality. So again, selling calls, negative delta, they need to take some positive delta position to maintain delta neutrality. In the case of an index, let's say SPX, you can't buy or sell SPX. So in the case of SPX, market makers have to buy and sell futures, ES futures, to hedge the delta exposure. All right, Jopi, I hope that makes sense. All right, back to Bookmap. Again, ES trading just below the high of the day. Zoom in on this just a bit. Making a series of higher lows and higher highs. Let's take a quick look at Trace, and then we'll wrap it up. All right, so now looking, let's go to real time. So it looks like, as far as delta pressure goes, let's zoom in just a bit. Still in somewhat of a neutral zone. Some buying pressure helping to push SPX back above the call wall, absolute gamma strike. Let's check charm pressure to see if there are any clues about where SPX might pin at the end of the day. And I'm looking for the levels between blue and red as likely pinning areas. Let's change zoom back out just a little bit. So just based on this, depending on what options traders and buyers and sellers do, a potential pin for today at the end of the day would be right at 5,800, the call wall key gamma strike. That's in between this red zone charm pressure, selling pressure, and blue zone buying support. Back to Bookmap. All right, everyone, my time is up. I want to thank you very much for watching. Thanks for your questions and comments. Have a great weekend, everyone, and I will see you on Monday, hopefully from Asheville. So we'll see. All right, everyone, have a great weekend. I know it's going to be busy for me, and I will see you on Monday. Thanks, everyone.